Good afternoon, everyone, and welcome to the call. As usual, we have with us the management of Prestige Estates, represented by Mr. Irfan Razack, Chairman and Managing Director, Mr. Zaid Noman, Executive Director, and Mr. Amit Mor, the Chief Financial Officer. I'll now hand over the call to the management for their initial comments. Thank you, and over to you, sir.
Very good afternoon. Thank you, Pritesh. This is Zaid Noman. Thank you for joining today's earnings call, and I wish you all a very happy New Year, since it's the first call of New Year. I'll begin by providing an overview of our key performance highlights for the quarter and the 9 months of the fiscal year. For our operational performance, I'll begin with the Q3 FY25 sales. We've achieved the sales of 3,013 crores with 2.23 million square feet of real estate sold across 888 units. Our sales performance remains well diversified, with Bangalore, Mumbai and Hyderabad being key contributors. Despite no new launches, we have achieved a fairly strong sustenance from our projects like Prestige Raintree Park, Prestige City Hyderabad, Prestige City Mumbai and Prestige White Meadows. Our average realization for the quarter remains strong at 13,684 per square foot. Collections continue to be healthy, totaling to 3,257 crores during the quarter. For the 9-month period, we recorded a total sales of 10,065 crores, with 8 million square feet sold across 3,618 units. Collections for the 9 months stood at 8,910 crores, reflecting steady cash flow generation across our projects. Going on to our financial performance, revenue for Q3 FY25 stood at 1,697 crores. EBITDA for the quarter was at 633 crores, translating to a margin of 37%. PAT for the quarter stood at 32 crores, impacted by mark-to-market loss on our REIT holdings, given that we are holding in Nexus REIT. For the 9-month period, total revenue reached 6,146 crores. EBITDA for the 9 months stood at 2,342 crores, with a strong margin of 38%. And PAT for the period stood at 573 crores, with a net profit margin of 9.34%. Something interesting that I'll share with you is our segment-wise performance. I'll begin with the office. Our office segment recorded leasing of 3 million square feet, of which 2.85 million square feet was fresh leasing. I'd like to put on record that the calendar year was 4.5 million square feet, which was one of the highest in the market across the country. Occupancy levels across our portfolio remain stable at around 90%. Exit income as of December 2024 stood at 522 crores for the company, and we will achieve our target of across around 700 plus crores for March 2025, which we have guided earlier. Retail, our portfolio continued to perform well, with gross trading value of surpassing 1,750 crores during 9 months FY25. This is the consumption figure across our malls. Footfalls at our malls remain strong, reaching 14 million visitors, while occupancy levels were at 99.2%. Our retail segment's exit rental stood at 217 crores as of December 2024. For our hospitality portfolio, we maintained steady performance with an average room rate of 14,000 rupees, and a revenue per available room, which is the RevPAR, at 8,500 rupees. Average occupancy stood at over 60% for the 9-month period, and the segment generated total revenue of 661 crores with an NOI of 238 crores for the 9-month period. Looking ahead, we remain focused on executing our strategic priorities and strengthening our portfolio. We are excited to conduct our maiden residential project handovers in Mumbai in the coming months, which is Prestige Fiesta at the Prestige City Mulund and Prestige Justin Classic. On our annuity assets in Mumbai, the rehab building has been completed at the Prestige and the OC has been received. At BKC, the rehab construction is underway and should be completed in the next few quarters. We are preparing, as you would all be eagerly awaiting to hear, to launch a robust pipeline of projects across all our key geographies: Bangalore, Hyderabad, Mumbai, Chennai and NCR in the next few weeks. These high-velocity projects located across prime geographies should drive significant sales volume and help us regain sales momentum. The projects that we will be launching are Prestige Southern Star in Bangalore, which should be around 3,500 crores of GDV. Prestige City Indrapuram in NCR, 11,500 crores of GDV, which is we've revised our guidance slightly upward as the realizations have improved in the region. And Prestige Pallava Gardens in Chennai at 3,000 crores. Prestige Spring Heights, 3,400 crores in Hyderabad, and Prestige Nautilus in Mumbai at 8,600. This is a total of 30,000 crores worth of inventory, which we will definitely bring in this quarter. We are saying this with utmost confidence, as most of these projects have been logged in for RERA and should be launched in the next few weeks. Now I'll hand it over to Mr. Razak for any comments.
Hi everyone. I think Zaid has very, very nicely presented a full overview, and I think he's covered all the points. And if Amit wants to add on, we'll ask him. Otherwise, we are open for Q&A. We'll open for Q&A. Amit says Zaid has been very clear. Hello?
Yes, sir. Yes, sir. Can you hear me?
Yeah, I can hear you.
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use answers while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Parikshit Kanpal with HDFC Securities. Please go ahead.
Yeah, hi. So Mr. Razak, so my first question is, sir, how many of you have, I think Zaid spoke about 30,000 crores of projects which will get launched. So many of these projects, or which are the projects which have already been logged in for RERA?
See, Zaid has given you the list. As of now, Prestige Southern Star has got approved, and I think, and then there's Prestige Suncrest, which is missed out here. Even that is also logged in for RERA. Pallava Garden, the plans are approved. We have to get it in hand for us to lock it in RERA. And Prestige Nautilus, we just got the change of name just an hour back. So that is also there. The plans are approved, and the change of name from the previous promoter has been done. We just have to fill in the new plans that have been done and that have been approved. And the next one is the Spring Heights. The approval should come in our hands today, or maximum tomorrow, after which we'll log in for RERA. So all these are like happening, including Prestige City Indrapuram in NCR. We've logged in for RERA, and it's work in progress. There are some clarifications which we are seeking, which we will give, and we will satisfy them.
But especially Indrapuram is a large project, sir. So do you think in first half of February you will be in a position to launch it? Because we've been hearing for now many weeks that the queries have been coming back and forth, but we've still not been able to get approval. So what is the issue there? And
we have authority that probably is overstepping, but we can't say that in so many words now. We have to. They want us to. We've got a co-promoter and our previous landowner, and our sale deed very clearly says, apart from the consideration, we also give a percentage. But they want us to do a JDA. So we are trying to do that and satisfy them. There's no other choice. According to me, it's nuts, but then I can't fight. I have to just comply.
Okay, sure. So now just last question on the guidance, sir. So I think you have done 10,000 crores in 9 months, and now to meet that guidance of 23 or 24,000, I mean near about 23, 24,000.
Yeah, do that high jump. If the inventory is available, it is possible, because whenever we do a launch, we sell about 30 to 35% or 40% of the inventory. So I've got 30,000 crores worth of inventory that can come into the market, and 40% of that is 12,000, and plus I've got existing inventory. So it's not impossible. Now it all depends on how soon the RERA numbers come. Like you rightly said, we are in end of Jan, so it's just 8 weeks remaining, out of which February is a short month. Our teams all geared up, and the best part is the customers are waiting. It's not as though, there's no interest or there's no buyer. We keep getting, a lot of inquiries. But the thing is, we have to follow the regulatory, we have to follow the law. And if it, by chance, it doesn't happen in this quarter, it will just flow to the following quarter. But according to me, in all probability, we will pull it off. I don't see any reason or any doubts into this.
And see, I mean, this project has been widely advertised on social media, especially the Indirapuram. So, and what we have been hearing, there's a good undercurrent on demand side. So, looking at EOI and the numbers which you highlighted across all these projects, do you think EOIs will catch up to that 30-40% kind of demand which you earlier spoke about?
I'll tell you, you see, Southern Star, like once we launch it, it's like we will be able to sell off almost half of it, or more than that. And even we've got what is called the other project in Bangalore, which is Suncrest. Even that also will be with 800 crores. But between Southern Star and Suncrest is 4,300 crores. We should be able to get about 2,500 crores from there. And similarly, Nautilus is 8,665. But my team in Mumbai has promised me that this quarter, since we are all set, there is a lot of interest on that. We should get another 2,000 crores there. Then what remains is Pallava and Spring Heights with Chennai, Hyderabad. Now, Indirapuram, the plans are approved. If I get my RERA number today, I'm ready to go because even my CEC is almost ready. But then it's what to do. We thought we'll actually launch it in the previous quarter. It's not happened. I only hope and pray we don't miss this quarter.
Indirapuram could be 5,000-6,000 crores if you are able to launch it. I mean, almost 12,000 crores.
Easily. But the thing is, I should get it. There's always that miss. But you see, and I don't want it to linger too much. In fact, I personally went to Lucknow myself to convince the chairman. The chairman is receptive. But let us see what happens.
Okay, sir. Sure, sir. Thank you and wish you all the best. Those were my questions.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much. Sir, if you can also talk about while you'll have 20,000 crore worth of inventory potentially spilling over to FY26, if you can briefly outline what is the plan for 26 in terms of launches?
Hi, Puneet, this is Zaid. Yes, while we have about 22,000 crores highlighted from that 60-odd thousand crores, I think we'll give you a better clarity by the end of this quarter because whatever we didn't launch this fiscal year will flow into the next financial year, next quarter and quarter that way. And also there's some new BD that we have done, business development, which will happen. For example, we will be launching our projects in Goa as well, which is slated for the next quarter, as well as many launches in Bangalore.
Okay. And secondly, any thoughts on why do we need to hold on to Nexus shares? I mean, I presume there will be other places where you can deploy for higher IRRs.
It's a sentimental thing with some 4.5% of it. There's no debt also on the Nexus shares.
Yeah.
They've kept it. Any time I want to liquidate, I can. Now, it's the wrong moment even if I want to sell. If I wanted to, probably I would have sold it when it was on a peak. That's almost 1,000 crores. We'll see. I mean, it's more sentiment than anything else. I think in the larger scheme of things that we do, I believe that 4.5% of the REIT is not something that I should be really worried about. And in case there is need of cash and then we want to reduce debt, we can straight away liquidate that and have it's like a liquid asset.
We have a lot of funds available in the company, Puneet. So right now we're not looking at liquidating the REIT units. Whenever a good opportunity is there which we can bank on, at that point of time we'll evaluate liquidating the REIT units.
No, very clear on this. Thirdly, on the land acquisition part, this time there were a lot of stake buybacks, etc. How is the plan going ahead? Are there more stake buybacks that you're looking at, or are you going to go for land acquisition route, or would you still prefer a JV kind of model which you've always done historically?
So here we remain agnostic. It depends on the opportunity that we are presented with. And based on that, we either do a JD a JV for our residential, and an outright buy for our annuity projects.
Any more stake buybacks still remaining?
I don't think anything planned for this quarter, or whatever we not done is whatever we have done. Apart from that, we don't have any other plans for stake buyback.
Okay. Lastly, if you can also, give some sense of collections run rate and construction run rate. So collection run rates without any launches are very nicely settled at 3,000 plus crore. Should we assume that that's the bare minimum that you will continue to run with? And on the construction cost as well, the spend has pretty much doubled compared to previous quarter. Will that be a new run rate, or is there expectation of further growth from these levels?
I'll come on the construction spend. I think so. In the earlier quarters, an average run rate of 1,300 to 1,400 was what we were spending per quarter on the residential construction. In the current quarter, we have spent close to 2,100. That is mainly because of two reasons. One, we have spent significant amount on approvals for our upcoming launches. That amount is close to 350, 200. We have spent 150 plus on the Indirapuram, around 150, 180 crores on the Nautilus project itself. Apart from that, we have a few projects which are nearing completions. Being your TPC Sarjapur, then we have some projects in Mumbai that is basically the Grand Classic and Siesta, and one project in Hyderabad region, which is the Beverly Hills. At the final stages, the construction spend is generally a little higher. But on a, I would say, longer period, we can say that around 1,500 to 1,600 will be the average construction spend per quarter. In terms of collection, the collections have been on a steady state for last 3-4 quarters. Last 3 quarters, because the sales have not come. What were the big launches we were planning have not hit the market. Once the launches are achieved, I think so the collection should grow from currently 12,000 to 13,000 levels to 16,000 to 18,000 levels per year.
Sir, how much from?
Right now, my residential collection is around 12 to 13,000 crores, around 13,000 crores. It should grow to 16,000 this year once all the 4-5 launches what we have spoken about a few minutes back, those are able to hit the market. And then from there, the normal whatever sales growth is there, we'll be able to grow on collection front as well.
That's very interesting. Thank you so much and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Isha from Axis Securities. Please go ahead.
Hi, thank you for letting me ask the question. Most of my questions have been answered. I just wanted to understand a kind of growth guidance for launches for FY26 as well. Say, for example, all the launches that we mentioned in FY25, most of them may or may not happen in the quarter 4. Do we have any guidance for FY26 for launches and for pre-sales as well?
This is Zaid. We'll guide on this in the end of this quarter.
Okay. Hello, am I audible?
Yes.
Yes, ma'am. Please go ahead.
Yeah, no, I just wanted to understand. So, FY26 launches will be guiding post quarter 4 is my question.
No, I said, first let's finish this quarter, then we'll evaluate after the dust settles. We have a big, strong pipeline. We've got another 30,000 crores worth of projects that are under approval and all that. So we'll evaluate once this quarter gets done, and we'll see where we've reached on our target. And then based on that, and based on what inventory we have, we will inform you in probably the next quarter. And it's too early for us to talk about the next quarter just now. The teams are working with a big pipeline, and I think there's no dearth of inventory or pipeline that can come. It's all about how quickly we can get the regulatory stuff and bring the product to the market. Like I said, the market is there, the customer is there. Only thing is we need help from the powers that be.
Okay. And nothing on pre-sales guidance as well going forward?
I didn't hear you. I am not clear.
Nothing on pre-sales guidance as well for FY26?
No, FY26, as I said, I can't give you guidance just now. Let's finish FY25 and then we'll go to 26.
Okay. Thank you. That's it.
Thank you. The next question is from the line of Yash Gupta from Ashit Koteja Family House. Please go ahead.
Yeah, good afternoon, everyone. So my first question is on what revenue number are we looking for in FY26 with the project completion method, and what could be the EBITDA of those projects?
Amit will answer this. We would definitely like to, I believe in Maharashtra, auditors told us they are doing a percentage completion method. Now, they are now still doing 100% completed method. So it has a big bearing on the financial results, and obviously all expenses are getting debited upfront, whereas my revenue comes much later. So we are having a chat with the auditors if they're doing it in a different territory in the country on a percentage completion method. Why two different rules for the same industry? So it's a discussion that's going on. Supposing we all revert to either percentage completed or it should be 100% completed method, I believe otherwise you can't even make out what is happening, especially for analysts like you. It will be very difficult.
Amit, in terms of the expected revenue for FY26, we will have some large launches, projects getting completed in the next financial year, which includes the Prestige Sarjapur. So, the Prestige City Sarjapur. In terms of revenue, it will be in the close of 10,000 to 12,000 crores, what we can expect next financial year.
And sir, what could be the EBITDA margin for those projects?
30% you can expect the EBITDA margin on these projects.
Okay, sir. So my second question is on, in the slide number 20, we are showing that free cash flow from the residential business is around to be 50,000 odd crore in next 4 to 5 year approx. So approximately we are getting 10,000 crore every year. So how we are rewarding our shareholder going forward?
See, our strategy has always been whatever the free cash flows that we generate from the residential segment, we would like to redeploy a portion of it for business development to grow the residential segment and deploy the balance for my annuity business so that the reliance on debt is reduced.
Okay, sir. But is there any different policy we are looking for, any specific thing?
No, currently, what we will look at is completing our annuity portfolio, okay, because there's a significant amount which we need to spend before we start yielding. And at that point of time, we can have a reevaluation on how the dividend policy or the shareholder, how we can reward them at this point of time.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Pritesh Sheth with Axis Capital. Please go ahead.
Yeah, hi. Thanks. Just a couple of questions. First, on in general, the approval process, are you seeing any improvement now versus where we were like 2-3 months ago? I mean, let's keep Ghaziabad aside for now, but in general for your core markets like Hyderabad, Bangalore, Mumbai, how would you rate the current approval process, in terms of timelines?
The rules are the same, they're fixed. There's no leeway in how but it's only a question of a distraction. In the last 3 quarters, what happened is each state went into election and we had general elections. That's why this year we had this huge lag. And now that's behind us. The only thing is we just discovered that every state, the RERA interpretation is very different. and the method they deal on giving a RERA. Actually, the thing is we have to just log in online and given all the documents and get a RERA number, registration number. But then here, everybody has interpretations differently. So it takes its own time, and we have to probably comply with what they want. That's it.
Got it. And just second question on the retail revenue, which was down this quarter by 4% YOY. We have seen other players, doing well in terms of retail segment growth. Any specific thing you want to highlight for what happened for us this quarter?
Retail revenue is not down. In fact, our malls have traded the best in this quarter, and we've had the best revenue. Right now, we are operating 2 large malls and then 2 small ones, and we've got almost 100% occupancy in the retail, and I think December was the best month where we got the maximum turnover, so I don't see any concern there. I don't understand which retail revenue you're talking about. Because as far as I'm concerned, it's 99.2% occupancy, and there's no dip in any revenue. Unless they are talking about the excess REIT which we have written off, that could have brought down the profits because that mark to market, that's something to do with the stock market and nothing to do with the business.
Yeah, I'm specifically talking about the disclosure that you give in presentation, but I'll connect offline for this. That's it from my side. Thank you.
All the best. Clear on what you're asking.
Yeah, we can move on to the next question.
Yes,
I'm done.
thank you. The next question comes from the line of Abhinav Sinha from Jefferies India. Please go ahead. Mr. Abhinav Sinha, you can go ahead with your question, please.
Sir, on the upcoming launches, just wanted to check what are the project ticket sizes that we are looking at in terms of, unit per crore, particularly for Nautilus and Southern Star.
Nautilus is a luxury project. It will be average.
I think if you're asking on the ticket size will be roughly about 25 crores upwards.
35. Is that right?
Upwards. That's the minimum because there are different sizes. So it is a luxury project and it's the most premium that we can get in the company. It can go much, much higher, even 70-80 crores.
Okay, and you are expecting around 2,000 crore of sales at launch, right? So roughly 50 units to be sold approximately.
That's right.
Is that right? Yeah?
You can interpret it whichever way. Now the only proof of the pudding is in the eating. Once we launch it, there is a good traction, there is a good inquiry. Now it's all like Prestige Ocean Tower. We were also surprised that we sold 104 units and we got about 60 odd units left over.
And similarly for Southern Star, what is that product?
Southern Star is a medium-income product, and I believe that's probably around 1.5 crores to about 3 crores. So that will be the ticket size, and that's a different thing. Southern Star, Spring Heights in Hyderabad, as well as Pallava Garden in Chennai. These are the mid-income products, and of course Indirapuram in NCR, all mid-income products.
Okay. So you've also added a new project in Mumbai this time. So can you describe where it is located and what are the expectations from that?
This is Dahisar Mira Road. We bought the land and it has about roughly a little less than 1 million square feet. 1.1 million. About 1 million square feet of saleable area. We finalized and closed out on the plan. Actually, sort of design part is over. Now it's going for approvals. Let's see. We're trying hard to see how soon we can bring it to the market. There, the selling price again, it's a quick seller because the overall ticket size will be much less, and your selling price itself on carpet will be around that 18,000 rupees.
Okay. And so finally, on the gearing ratio, what should we expect in the next few quarters? Is now the level that we will maintain, or it will possibly go up a little more?
No, I think it shouldn't go more at all. Actually, as I see, maybe 1 or 2 quarters it may spike up, but the amount of inventory that is coming in, the sales that we are looking at, we should have enough of cash flow. Whatever cash flow was tied up and whatever debt was tied up for all these projects, it will come back, and we'll be quite flush with additional cash flows. That will help us for our CapEx projects also.
So ideally 0.5 to 0.75 for the next maybe 1 or 2 years.
Our endeavor is to keep it below 0.5.
Okay. Thank you.
That's our wish, and I think we will do it. We'll pull it off. I don't think there should be any problem on that, because there is a lot of positive cash flows that are going to come in.
Sure, sir. Thanks and all the best to the team.
Thank you. The next question comes from the line of Biplab Debbarma with Antique Stock Broking. Please go ahead.
Good afternoon, everyone. So my first question is the over-enthusiasm by the regulators, if I may use the euphemism, restricted to the Indirapuram project, or does it extend across projects? Are you seeing this kind of over-enthusiasm by regulator across markets?
Hear you, sir, properly. I can't hear you properly.
Sir, I'm just trying to understand, is this approval challenges restricted to Indirapuram project, or it is across projects?
No. See, each state has their own way of functioning, and we have to learn that. You see, this is the first time we've gone to UP, and now we are learning, and probably the next time we would have learned by then. You see, in other states, we are already there for many years, so we've understood how they operate, and we have to play to the galleries.
So that means in other states or other projects, you are not seeing this kind of...
No, not at all.
Okay. That's a good news. And second is regarding North India's Worli. Worli already has significant supply in the same category, 20 crore, 30 crore category, and more to come from other developers, major developers, reputed developers. So how confident are you in the response? Because I believe lot to sell, 7,000 crore of GDV. So are you seeing a kind of oversupply in the market, or you believe that there is enough demand to absorb all the supply that would be coming in the next 1 year or so?
Yes. You see, what happens is, real estate is all about location. This location has found people fancy, and my staff at the ground level are very, very confident. They already have primed up the customers, and they are confident that once we launch, we'll get significant numbers from this project. Now, like I said, proof of the pudding is in the eating. And if once I launch it and I don't get the numbers, then it will be proof that there is no demand. As of today, there is demand. As of today, there is attraction. And we believe, and even I have to yet to see it, like, people, my staff was not very confident on the ocean towers when we launched it, and they couldn't believe that it went so fast. Similarly, here also, we are not in such a great hurry to sell it because this product is very good. This location is the best of the best in what is available in those micro markets. Yes, more and more supply comes in. There will be a stress, and we believe that only the best can survive. So, and according to me, our project is the best.
Fair enough. And my final question is, could you please update us on the progress of your key commercial projects, BKC, Racecourse, and Delhi Aerocity? When do you expect this to be completed? Because I see some visually, whenever I go in that area, I see significant progress in BKC and the Racecourse. But if you could give more insight on what kind of progress and by when do you expect this to be operationalized?
See, the good news is that Mahalakshmi, my rehab tower, which, it's not rehab, it is a beautiful office tower, which is the Prestige Turf Tower, is ready. We've got the occupancy, like Zed said in the opening remarks, and we started handing over the units to the Turf Estate and the Evergreen Estate occupants to move in there. And once they move in there, we'll demolish these two, this thing. But in the meanwhile, the tall towers are already under construction, and our targeted year of completion is 2028. Similarly, BKC is also moving very, very fast. Fortunately, we are out of the ground. Even there, we have a rehab tower, which by June will be completing about 700 apartments, which we're handing over to the EWS, to the authorities. And at the same time, both BKC 101X and Y are coming well. And the good news there is, we have done quite a lot of substantial pre-lease. I can't reveal the numbers, nor can I reveal the name, because these are both strict under confidence. But I can tell you quite a substantial amount of area has been pre-committed and big names. So that's giving us that much more confidence. And also we are building an Edition hotel there, which you've seen in our investor presentation.
What about the Delhi Aerocity project?
Huh? What about?
Delhi Aerocity project, sir?
Yes, sir. Now, for instance, we are doing this massive hotel in Aerocity in Delhi. That is the St. Regis and the what's that called? The Marriott Marquis. The structure for the hotel portion is ready, and the glazing and the windows and the other job is going on, including the finishes. And the office portion also is coming up very fast. And the good news is that the entire office portion is pre-leased. And we've got some good marquee clients even there. And because of confidentiality, I can't tell you the name. But there, the entire office is pre-leased. It's 100% leased out.
And when do you think BKC and Aerocity project would be completed? By when?
BKC 2028, Aerocity by 2025 end.
Oh,
of course, hotel will, because it's such a large asset, it will start trading in 2026 beginning, but the asset itself will be ready by 25 end. That means I've got 12 calendar months, out of which 1 month is gone. It's 11 months, of course, in case there are more stoppages like Gap 4 in Delhi, we may have suffer some delays.
That's great news, sir. Thank you, and all the best, sir.
Thank you.
Thank you. The next question comes from the line of Vaibhav Sabu with Nippon AIF. Please go ahead.
Hi, thanks for giving me the opportunity and good afternoon. Couple of questions from my side. Sir, one thing, while you have explained that UP geography was new for you, but if I look at it, even within like our tour geographies of Bangalore, etc., there seems to be delay in approvals. So just wanted to understand the reason for that. Is it because we have filed for the approvals late, or because in the last conference call you had stated that we would be launching 50,000 CR of projects just in H2. So just want to understand why there is approval delay especially for our tour geographies.
No, there is no delay in the other geographies. It's only, as I told you, there was this huge distraction for general elections and the state elections, and all that is behind us. Either Hyderabad went for election, or Bangalore went for election, or the country went for election. That all distraction is over. And I think all the officials, what happens in elections, all the officials are assigned to different states, different cities for the election duty. So when they're not available, nothing works in the system. Now I think that's behind us, and I don't see any further delays. And I believe that if we really focus and we can get all our projects which we were planning on into the approved and get the RERAs done and then launch these projects.
So sir, just in addition to this, out of the 57,000 CR which we have stated during the PPT that the GD of upcoming launches, how much of this has been already filed in RERA approval?
I think Webb in his opening remark told you about 30,000 crores worth of projects are almost applied for RERA, or the approval has come. We just have to file for RERA. I think all these will come. Like you see, NCR is 11,500, I told you. Bangalore will be about 4,300. Chennai will be 3,000. Hyderabad will be 3,000. So it's coming one after another. Mumbai is another 8,000.
And sir, just one last thing. On the Hyderabad market itself, we seem to have quite a inventory there, which has been there for quite some time. So how are we looking at that market particularly? Because, there seems to be a lot of supply, but, not enough traction. If I look at, the demand versus supply, that seems to be quite severe for Hyderabad versus our other markets.
See, now if you're talking about office market, I agree, Hyderabad market office is saturated. There is oversupply. Fortunately, we built 2.2 million square feet in Hyderabad in office. We are left with 700,000 more square feet to lease. We are talking to 2-3 large clients, and my team is hopeful that in the next 2-3 quarters they'll make it 100% filled up. With that, we are probably fortunate because we did a good product and our location is good. It's already almost consumed. Now, on the residential market, the good news is we did this Prestige City, Hyderabad, which has 4,700 apartments. Out of 4,700 apartments, where we are just getting out of the foundation, the company have sold more than 3,300 apartments in a period of just about less than a year. I think that's no mean achievement, and I think the rest of the 1,000 odd. In fact, I've told my team to go slow and not to sell it off fast because we need to also get some appreciation on the price. Similarly, we completed a project in Hyderabad and Kokapet called Prestige Tranquil, fully sold out, completed. We have completed just now in February 11th, we're inaugurating a project called Prestige Beverly Hills, fully sold out, completed. And now the other one that is ongoing is Prestige Claremont, where we've sold almost 70% of the inventory and the pricing has gone up. So I think we are pretty confident on the Hyderabad market. It depends on your location, depends on your brand, I think, and of course the proper pricing, it will sell.
Understood. Thanks for all the best.
Thank you.
Thank you. The next question is from the line of DSP Mutual Funds. Please go ahead.
Hi, this is Vivek here. Just a continuation of the previous question, actually, and this is virtually the last slide of your presentation. If I see the inventory, the stock drop, it was 12 million square feet in the last quarter. It's come down to 10 million square feet. At the price hikes that you're seeing, do you see any difficulties in liquidating the inventory? And would this 2 million per square feet be the rough run rate going forward as well? That's the only question. Thank you.
Which is the slide you're talking about, page number?
Page 47, 48.
47 is exit rentals retail, and then you've got residential project free cash flow. Is that right?
That's the one. The project free cash flows. Where you see the stock, it shows 12 million square feet in the previous quarter, and it shows 10 million square feet.
10.05.
That's right.
And the value is 13,682. This is across all geographies, all projects put together.
That's right. So
what is your question?
So the question is, is this essentially in the last quarter you sold 2 million square feet, and is that the run rate that you see? Because you said you were holding off for price hikes and so on. And at the current price hikes, would you be able to clear off this at the same run rate?
You see, now 2 million square feet on a sustenance basis, I am selling, I will sell, because I don't want to sort of give schemes like other people are doing and try to sell. There's no desperation to sell. So we are doing what we are doing in a proper manner so that the bottom line of the company doesn't get affected and actually gets boosted in the other way around. So if you look at it, rightly pointed out by you, to the volume of work that we are doing, out of 91 million, if I've got 10 million stocks, that shows it's just about 10% of the stock that we are holding, which is very, very minimal. And that's going to 2 million in a quarter.
2 million would be on the lower side because we didn't have any launches.
No, he's talking about this inventory.
This would be inventory.
Because in inventory you add up, you go up further. This inventory, I think on a sustenance basis, it should go. What is the inventory we have? Is basically we've got the Prestige City Hyderabad, Prestige City Mulund, and a little bit in Bangalore.
Sure, sir. Thank you very much and wish you all the best.
Thank you.
Thank you. The next question comes from the line of Yash Gupta from Ashit Koteja Family House. Please go ahead.
So just to confirm the launch number, we have 56,000 crores of launch pipeline. Out of that, 32,000 crores we are expecting to launch this quarter. And in the morning in the TV interview, you have mentioned that another further 50,000 crores of projects are under design stage. So is that correct understanding?
Yeah. There is the pipeline is there, no? So this is what we have told. 56,000 is what is ready, which is under approval. There's another 50,000 where we have got different lands which will come as we go along. That is the future.
Okay, sir. And sir, the last question on, can you throw some light on the Jijamata? Because I think in this PPT, this time in the PPT, we have mentioned that 2.1 million square feet is of mall and around 700 square feet of service apartment plus hotel.
Yeah, see, Jijamata, very correct. There is residential, there is hotel, and there is retail. And we are trying to see whether we can fit in service apartments also. We have appointed SOM as an architect, and they have given a preliminary design. And in fact, even just the other day, my partner sent me a mail saying that IOD has been approved. We need to pay certain fees. So it's all work in progress. We have to still freeze a lot of planning there. I think it will start coming as soon as we can. It gets approved. But now our focus in Mumbai is Nautilus and Dysart. That is Mira Road.
Okay. Thank you, sir. Sir, this last one. Recently, we have done some new launch of hotel near airport in Mumbai. So is that understanding correct? But I think we have not mentioned that in the PPT.
No. Which is that you said?
In Mumbai near airport, international airport, we have done some launch, something kind of for the hotel. 5 acres, 5.5 acres of hotel.
No. There's no hotel near the international airport in Mumbai. There is in Fas, you are saying there's a large piece of land which we are in discussion. We may do office over there, but still it's work in progress. Nothing has been formalized.
Okay, sir. Thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Parikshit Kanpal with HDFC Securities. Please go ahead.
Yeah, so thanks for the follow-up. My question is on BKC. You said that you have pre-leased some areas. So what kind of rental rates you've been able to achieve there?
No, that is what I said. Neither can I tell you the rate, nor can I tell you the customer. It is little, we have this confidentiality which we find with the customers. But I can tell you we have leased out approximately over 500,000 square feet.
And I think our budgeted rate earlier was 320 rupees per square feet. So is it better than that, or like how should
320 is what? No. 320 is where is it 320?
I think earlier in your earlier presentations, you used to disclose rental potential from the Mahalakshmi and the...
It's there, but I believe it can't go below. But at the same time, honestly, I cannot tell you specifically how much we have done the transaction for. Obviously, when I've given you an indication that that's our expectation, obviously it has to be better than expectation, not below.
Okay, so it may be better than expectation, you are saying. So.
Yes, please.
Okay, sir. And so just one more question on business development now. So you have now raised money, you have capital with you, cash flows will start coming in as the launches happen. So how do we read now into business development in the quarters coming in? So how is the pipeline looking there, and what kind of land bank additions one should be factoring in assumptions for next year?
No, business development is work in progress. Like what happened after our QIP, we bought land in Mumbai, we bought land in Goa, we've invested in Bangalore. almost 1,700-1,800 crores has gone into land, and obviously that will come back once the approvals come in. It will come into the company in terms of additional cash flows.
Okay. And in NCR, sir, especially on the Gurgaon side, anything you were able to freeze there in terms of business development? Because I think there has been a lot of work in progress going on there, and you've been talking about that good news will come in soon. So any progress on the Gurgaon side?
No, there's enough and more opportunities. There's enough and more land that is offered to us on a daily basis. We have to evaluate that. Our focus now today will be to see that what we've invested in, that we are able to launch and cash out, that will give us the confidence to do more. There's no sense in pouring more and more money into a region which is where we get blocked. So we don't want to get blocked. We definitely want to see that the liquidity comes in. That's how we would like to churn capital. So offers are there, plenty of opportunities there, and it has to be the right opportunity, right price, and we always have an open mind.
Okay. And this last question on the trade center, I think Dial Aerocity, you said that entire office has been now pre-leased. So is it like the area will be your share will be about 0.4, right? 0.8 is total and your share is 50% will be 0.4 million square feet here, right?
0.8, 0.6 according to me. And
0.6.
whatever it is, it's an SPV. So Prestige is 50%, DB is 50%. So that's how it is.
And what would be, if you can give the rates here, because you said it's entirely leased out, so. Can you give lease rentals rates which you have logged in here, because you told that it's entirely leased out now?
It's leased out. That's why I said I can't tell you the client's name or the rent. It will come out. It will come out very soon. Okay. But it's a very decent rental.
Okay. Sure, sir. Thank you.
Bye-bye.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Jeet Shah from Pinpoint. Please go ahead.
Hi, sir. Am I audible?
Yes. Yeah, you're audible. You're audible.
Hi, sir. Congratulations on the quarter. Just a request. Could you please repeat what's been the latest update of the Indirapuram project you mentioned in the beginning about the regulator?
Suddenly you become...
I will give you the update on the Indirapuram project. We've applied for RERA, and it's it's a work in progress. So I think within a month's time, that's the next 3 to 4 weeks, we should have a launch.
Okay, so you're still fairly confident it comes through in this quarter, right?
I'm not able to hear you. You're not audible at all.
Hello?
Yeah, I can hear you.
Yes, sir, please go ahead, sir.
Hey, yeah, I just wanted to reaffirm, wanted to ask if you're fairly confident that comes through this quarter.
Yeah, we will launch this quarter.
Sure, thanks. Good luck.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference to the management for closing comments.
Thank you very much for all the feedback and questions. We understand that you are eagerly anticipating our financial year and launches to go as per plan, and we also are mightily confident that we will make it happen. We've never disappointed and we will not disappoint. So wish you all the best and thank you for participating in today's call.
Thank you for all participating. Let's hope the next 2 months go well and we are able to launch the way we have planned. But I believe demand is there. Company is quite robust in their activities and the whole team is really putting extra effort to see that we succeed. And time will tell. Thank you. Thank you again.
Thank you. On behalf of Axis Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.